Hello traders, Gary Wagner here, just about 10:10 in Honolulu, 4:10 in New York. It is Friday. Happy Aloha Friday, as we say on the islands, June the 10th, 2016, and this is the Daily Report for Gold and Silver, in which we combine it with trending markets on the weekends to give you an overall feel or breadth for activity this week in the market. We have certainly had our hands full when we look at recent activity. Precious metals continue to rise. I believe we're looking at a 4-day rally underway. Absolutely strong movement to the upside. Gold, though, trading up about $4.40, about 1/3% to close at $12.77. Low on the day is $12.67 and the high $12.80. So traders, I do want to start today's video report by looking at our current levels of support as well as resistance. Of course, on Monday of this week, we sent out a special trade alert recommending that our subscribers go long gold. We entered our positions at approximately $12.45, market currently trading at $12.75. Originally, we had placed our stops below $12.20. And this morning, we sent out a special trade alert recommending that all stops go below $12.44, which is this area right here. And it is also why we are moving our stop to this location, because my sense is that this is a level that should provide pretty eloquent support for the market should it continue to rise, which quite frankly, I do expect it to. However, at the same time, we do have to note that we have a small amount of headwind, so to speak, resistance at roughly the 1280 area. Today's high is 1280.9, call it 1281. So we certainly saw a little bit of resistance, and I believe it's based upon this former top. And of course, resistance above that is going to come in at 1306. My personal sense is that we shouldn't have too many issues surpassing this particular mark, meaning 1280. However, I believe we could see some resistance come into the market at around $1,300 per ounce. And traders, one of the most noteworthy factors or characteristics in the market this week was the headwinds that were created by a stronger U.S. dollar. We'll take a look at a couple of dollar charts towards the mid or end of the show. But for example, on today's move, in which we saw the market move up roughly $5 on the day, that really was a $11, $12 rise in normal trading. And because of a strengthening U.S. dollar, we had to take away about $6.50 of that $12 rise. So roughly half of that rise was taken away by a stronger dollar. But as in yesterday's trading activity, even with a strong dollar, we absolutely saw gold able to overcome that. In light of the trading activity that we did see this week, what are our exit strategies and upside targets for our current trade, as well as our overall forecast for gold prices over the next couple of weeks and next couple of months? Well, traders, you realize that my contention or belief right now is that in essence, what we have seen since these lows were hit at approximately 1040, end of last year, beginning of this year, was a first rally, that rally taking us really to the price point that we're at now, which is roughly 1280. From there, I believe we went into a correction. However, that correction came out as an irregular zigzag or an irregular ABC, in which we had our A wave and then our B having a high price above that of our wave one. That's why it's labeled as an irregular, to culminate with a final C as this market moved at the end of last month down to these lows at, I believe, $11.99 as the intraday low, but just call it 1200. I think that concluded our C wave. It also concluded a wave 2. And of course, this last C was a 3 count, and so it concludes that also. And that brought us into a dynamic scenario in which my current take is that we have just entered a long wave 3. So traders, just using basic Elliott wave modeling and really highlighting on what I tend to call the three golden rules. One, which states that wave 3, this impulse wave that we are currently in, cannot be the smallest of any of the impulse waves. It allows us to benchmark to a degree what we're looking at. And what I have done here is created a basic fib extension in which we have taken the range from the lows achieved back last year to this 1280 move, and then really started that extension from the lows that we saw at the end of last month at 1200, and even a one-to-one relationship. In other words, if wave 1 and wave 3 are equal, that would take gold prices well over 1400. And therefore, my long-term or interim-term forecast, I should say, is that we will see gold trade to and touch upon and probably trade above $1,400 per ounce. Now, the caveat to that is obviously I don't believe it's going to be a single rally. We will probably see some sort of a 5 count, 1, 2, 3, 4, and 5. Of course, this isn't drawn to scale, nor is it where I expect the various waves to culminate and begin. But my point is that this isn't going to be a straight rally up, and what we need to determine on this trade is where we will see this first component of our current rally terminate and have a small correction that will be followed by a secondary impulse or a wave 3 defined within this larger wave 3. Long-term forecast above 1400 per ounce. Shorter term forecast, as I said at the beginning of this chart that we looked at, that 1300 is a logical place to look for some sort of headwinds. That being the case, and that being said, we want to be very sensitive beginning of next week with our current position roughly at 1280 to see what happens if the market continues to rise, and if it gets to 1300, how it will react. Now, in terms of the move this week in the precious metals and percentage gains on the week, silver has really performed in a stellar manner, closing well above $17 to close today at $17.33. And traders, to illustrate that fact, I have pulled up a weekly chart, spot silver. Each candlestick, of course, represents a week in trading, and consider this. The market itself was trading well below 1650. This is 1600 right here. So about 1620, roughly in that area, 1620, 1630. To close at 1730, we saw silver rise roughly $1 over this last week of trading. In terms of where I believe the market could go, there are only a couple of levels of resistance that we could see this market face. The next one comes in at 1750. However, I believe that is a fairly minor level of resistance. I believe that there's going to be major resistance should silver continue on its upward track at $18 per ounce, and then superlative resistance that would really correlate to the $1,300 in gold. The correlation to that price point in gold would be silver at $18.50. So these are the levels that I am looking for on the upside in silver. So traders, crude oil, which had been aggressively higher on Monday, Tuesday, and Wednesday, hit that top at around $51 a barrel and has fallen ever since, meaning yesterday as well as today, closing off over 3% on the day, $1.60 in terms of the negative results per barrel. To watch crude oil close below 50, which is that critical psychological level at 48.97. Now, there's no doubt we have seen crude oil really rise off of these lows that were hit back mid-February at $26 per barrel. We saw them rise in a series of waves, really culminating above this prior top, which sat at around $51 a barrel, that back in October of last year. And if you recall from our daily show, really what we have been focused upon was even with this really upward bias, once we put in these channel lines, what we can really see is that this market has traded with an extreme bias to the upside, but also within the channel. And 2 days ago, we pointed out the fact as this market hit 50, or just below, I should say, $52 a barrel right in here, we noted that we were now at the upper levels of this channel, and that even in a bullish scenario, we would probably see a track back to the bottom. We certainly got that today. The interesting thing to watch come next week is whether or not it breaks below this, because then we're looking at a different scenario than we are currently, in which the market has had the ability, or crude oil prices have had the ability to trade with that upward bias and would bounce off of this lower level support line that come in from the channel lines. The one noteworthy thing when we extend this line is we definitively have a close below it, but we have seen the market trade with lows or closes below it only to move back into the channel on the next trading day. Certainly something we're going to want to watch very closely. So as you know, traders, we have seen precious metals rallying aggressively throughout the week, and especially over the last couple of days, what we have seen is a stronger U.S. dollar, which creates, of course, real headwinds for the precious metals, maybe curtailing the upside move that we saw yesterday as well as today. Dollar moving up well over 0.5%, 0.67, to close at 94.58. No doubt, the U.S. dollar has been under tremendous pressure, really falling from these numbers at around 96, and then over the last couple of weeks in terms of trading activity, falling as low as 93.50. Last 2 trading days, we're looking at a daily chart. Absolute move to the upside, very, very strong. In terms of support and resistance, we really want to look at our weekly chart. And we can absolutely glean some information in terms of our current level of resistance. We're currently at 94.58. My sense is 94.30 to 94.50 is where we could absolutely find some resistance should the dollar continue to move in this upward path, because that is a 23% retracement of this large move from 79 up to 100 on the dollar index. Now, although U.S. equities did pare much of their losses coming into the close today, Dow Jones Industrial Average did close well below 18,000. Of course, 2 days ago, we had an effective close above 18,000, but that price point could not be sustained. A 0.5% plus decline today in U.S. equities to see the Dow Jones Industrial Average close at 17,865. Standard & Poor's also closing lower on the day. We are looking at the E-mini, which closed off about 18 points, or 0.86% of a decline, almost a full percentage decline, to close at 1287. Although we saw the Standard & Poor's along with U.S. equities, Dow Jones Industrials, close above the former year high that was achieved, in April of this year, in which we saw the market move to about 2,100, we certainly exceeded that, barreling through that pretty aggressively. The first part of the week, really solid gains throughout the week. That was up until yesterday. Really on Wednesday, we had a strong day, but it really topped out at about 2120, just shy of that point. That matches up to these tops that came in just before the major meltdown that we got in August, almost to the beginning of September of last year. And what we have seen today was tremendous follow through on the sell side, moving this market down. Do I have concerns about the equities markets at this point? Absolutely. The key right now, as far as I'm concerned, is holding above the 50-day moving average. If it cannot do that, we could see this market go into somewhat of a correction. I still believe that we will see record highs, or a new record high, I should say, in U.S. equities and the Dow Jones Industrial Average this year. However, the probability that will occur on this particular rally in light of the last 2 days of trading, has definitely decreased. The probability has gone down substantially. We'll have to see what this market does on the beginning of trading next week and whether or not it can trade effectively above, finding support above the 50-day moving average. There is no doubt we have seen an incredible week in the marketplace, culminating with the precious metals continuing to rise like a salmon swimming upstream. In other words, against that strong U.S. dollar. We saw equities move to a new high for the year, but unable to sustain that high and to move back, especially the Dow Jones Industrial Average, back below 18,000. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you on Monday for another daily update and review. Bye-bye.